Hello, Assalamu alaikum. Students, this is your teacher Azka Butt, and today we are going to discuss about the last part of cash flow statement. So we just discussed cash flow from the operating activities in our previous video, and now we have other two topics, which is related to investing activities, and the second one is your financing activities. Okay, so like we are going to learn that how to prepare the cash flow statement form from the financing activities and the investing activities. Okay, so when we are going to calculate, when we are going to make cash flow statement from the investing activities, so it means that we have to put some transactions which is related to investing activities, like all the activities which is related to and categorized under investing nature. So like we just put all these those types of activities under cash flow from investing activities. Okay, so first of all, the first one is purchase of non-current asset or other investments. Okay, so we all know that if we purchase any building, okay, any building, any machinery, okay, and any market securities, okay, all these type of things, we know that if we purchase these things, so it means that we are investing a totally new, you can say that a totally new capital into our business. Okay, but if we purchase a building for our factory, okay, like for example, if ABC company purchases building for $5,000. Okay. So like if we are purchasing building for $5,000, so it means that $5,000 basically it is we are just taking out this amount from our business. Okay, we are just taking out. It means that building would be debit because this is our asset. We know that this is our fixed asset, and if we are paying if we are paying this for in cash, so it means that cash would be credit. Okay, so if cash would be credit, so it means that if we are purchasing any kind of non-current asset and any kind of other investments, like if we are going to purchase market securities or any kind of bonds, or if we are going to purchase machinery, so it means that cash is basically going out from the business. So that is why all the purchases of net current assets and other investments, it would decrease your cash. So that is why like we have to minus it from this. Okay. So after that, if we are selling our non-current asset, okay, and maybe if we are selling our other investment like these investments, okay, so it means that it is increasing our cash. Like how it is possible? Like for example, if I go with this example again, so maybe we purchase this building 1st January 2020, and maybe after 5 years in 2025, we are going to sell it again. Okay, we are going to sell, basically not sell, basically sell. For example, you purchase 50 this building in $5,000, and now of course it would depreciate. So that is why it means that maybe its net book value is Now after 5 years, maybe it is equal to $2,000. Okay. And after selling it, maybe its net book value is $2,000, and maybe we could sell this building in $1,000. So that is why we add 1,000 into investing activities. Okay, so why we are calling this 1,000 as investing activities? Because this 1,000, like we are generating this 1,000 not from any, you can say that revenue. We are not getting this 1,000 from any sale. Okay. We are not getting this 1,000 1,000 from any kind of, you can say this is not a basically a revenue income, so that is why if a fresh capital, if a fresh cash would inject into business, so it means that it is your investment. Okay. Like we know that if Abdullah is going to start his company, so at start maybe he put $1,000 cash into business, and a machinery and 2 or 3 cars into business. So after maybe 6 months, or maybe after 8 months, he would maybe again invest and other $5,000 into business. So it means that it is investment. Okay, because it is coming outside from outside the business. It is not coming from inside the business. Like it is not coming from operations. We are not like say selling this. We are not generating this 1,000 from our revenue income. So that is why 1,000 would be like it would be your investing activity. You are getting 1,000 from your investing activities. Okay. Okay. So after that, dividend received from investment, like if you are invested, um maybe if you are invested $1,000 in ABC company. Okay. And after 1 year, or maybe after 2 years, you are getting your dividend. So of course it is also coming outside from the business. So that is why it is also called investing activities. Okay. So after that, we have net cash flow from used or in investing activities. So this is non-contested with other investment, we would reduce this because of this, our cash is going outside from the business. So that is why. And in sale of non-current asset or maybe other investment, we are getting cash from outside the business, not from any kind of income or revenue income. Okay. And dividend received from investment, it is also coming outside from the business. So that is why it is also investing activities. This is how it works. Okay. So after that, we have final cash flow statement from financing activities. Like what would be like what is the meaning of financing activities? So like all the activities which is categorized under financing activities would be if you are issuing any shares, or maybe if you are like taking any loan from debentures or maybe any bank. So because if you are issuing the shares, or maybe if you are taking loan outside from the business, so it means that you are going to finance this loan into business. So that is why it would increase your cash. So that is why it will be add into this. And after that, redemption of shares or debentures, like if we are paying back, so it will decrease our cash flow. So that's why we would minus, or we would reduce this from it. And if we are paying any dividend to our shareholders, so it will also decrease our cash flows. So that is why it will also minus from this. Okay. So what is the basically main difference between financing activities and investing activities? Investing activities, that kind of cash which is coming outside from the business, like we don't have to pay back, like we don't have to pay any kind of interest, and we don't have to pay back any kind of amount from it from it. So that is why it is kind of investing activities. But in financing activities, we take out some loans, we issuing some shares. So it means that we have to pay dividend, we have to pay back the debentures, pay back the loan to the bankers. So that is why it is called in financing activities. So this is the main difference between the financing activities and the investing activities. Okay, so there is a myth that mostly students got confused, that the interest which we are paying on our debentures, so it would also is a part of the financing activity, but it is not the case. You can okay, so बहुत सारे students confused होते हैं, like they got confused that why we are not deducting interest from interest, which we are taking out some bank loans from the bank. So why we are not deducting the interest amount from cash flow from financing activities? So why it is like that? It is just because of this. अगर आप ऊपर जाके देखें, कैश फ्लो फ्रॉम ऑपरेटिंग एक्टिविटीज के अंदर ऑलरेडी हम इंटरेस्ट पेड, जो भी इंटरेस्ट पे किया उसको लेस कर चुके हैं, ठीक है। यहाँ पे हम ऑलरेडी इसको लेस कर चुके हैं, बिकॉज इट इज टोटली रिलेटेड टू योर ऑपरेटिंग एक्टिविटीज। ओके, बिकॉज ये आप मंथली पे कर रहे हो, सो दैट इज वाई हम यहाँ से उसको बिल्कुल भी लेस नहीं करते हैं, फाइनेंशियल एक्टिविटीज हम उसको लेस नहीं करते हैं इंटरेस्ट को, ठीक है। सो that's the main reason why we are not deducting interest from cash flow from financing activities. Okay, so like our lecture is finished, and this is how it is. Like we just completed our cash flow from financing activities and also from the investing activities.